Greetings traders out there in Traderland, D7 here with Grok Trade on Memorial Day weekend. Take a time just to pause to remember all those who gave the ultimate sacrifice, their lives for the great United States of America, fighting for our freedom. So to all you veterans out there, much respect to each and every one of you. Getting into the markets here, I'm going to start off here with the monthly charts. The monthly charts are bigger, badder, more descriptive, carry more weight than the weekly charts and the daily charts. We're looking at this spider, which is the S&P500 ETF exchange traded fund on the S&P 500, which is 500 blue chip companies, biggest companies traded here in the U.S. predominantly. There are some ADRs, but anyway, let's just get into this. The monthly chart, we had this big run, the biggest drop that we have seen, guys, weekly drop that we have seen since 1923. We just broke that this week. This week we broke it. We rallied higher, as we've been talking about the last couple videos, that we have a really good chance of this thing rallying higher, and sure enough it did. The chart pattern that we see on a monthly chart is a bull pullback. You'll see these horizontal lines coming across here with these different numbers. This is a Fibonacci retracement. The Fibonacci retracement goes to the lowest low of this leg to the highest high of this leg, and we have a pullback. This month in May we went down, touched the 38.2 Fibonacci retracement level, and buyers came in at that point, came right back up, staying above this trend line. This is called a bull pullback with almost a hammer type formation. It's almost a hammer because the upper shadow should be very small, but it's not. It's a combination between a hammer and a spinning top, but nonetheless it has a much longer lower shadow than upper shadow. This is more bullish than it is bearish, especially after a nice drop to the downside. In other words, we have a very good chance on the monthly chart in June going higher. Now, there's an axiom out there in the market that says sell in May and go away, because usually the summer can get really bearish. Now, I'm going to be building an argument here that I'm going to show you both sides of the coin, and one of them could be really scary. So let's talk about what we see at face value. Face value, we have a bull pullback. Face value, we have a spinning top or a hammer type thing. It went down, touched the 38.2 and rallied back higher. A lot of buyers there. In other words, we have a nice chance of blasting higher. If I go to a line chart, you'll see this trend line coming down. We have a really good chance of blasting up, and the question is, can we get to that trend line? If so, look for that rip your face off bullish move to the upside that I talked about a couple weeks ago. Boop, 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 up, and it might have already started. Okay, it'd go higher. I don't think we will get to this high. I think if it does bounce, we do get past this trend line, it'll go up maybe to this level and then drop. I see that potentially happening, or maybe getting to that high and then dropping, and then we'll have a double top trend reversal. It's an M. Looks like an M. They go up and then down. Big M for murder. So that's what could happen. Now, if I look here at the diamond, same thing. Down, bull pullback. This one goes down to the trend line, to the penny, rallies back higher. We have a hammer or spinning top in combination, and this thing looks like it's getting ready to blast higher already on the monthly chart. If you go to the Qs, pullback, we got a Fibonacci's pulled here. We get down to the 50% Fibonacci. Buyers come in, rallied back higher. This thing could rally north, and furthermore the RSIs are starting to hook down below. Russell's 2000 hammer down, went to the 50% Fibonacci, came back up. We could break over those trend lines. We could rally up, and it could be a significant bullish run. Okay, if I go to the financials, big hammer, that is a hammer. That hammer went down to the trend line, I mean right at it, and the 38.2% Fibonacci level. Guys, that is so bullish. This thing should just pop higher, and you got the bulls buying, the bears buying. Everyone buying. We have several months of bullish activity, at least one, if not two. And in the fall, we'll have a significant drop to the downside here in 2022. That is what could be predicted here, okay? Now, I'm going to show you something that is a scary to bulls, okay? For bulls, this could be a really scary scenario. I'm going to go back to the spiders. The spiders, we have this pullback. We're at the Fibonacci levels. We have this hammer-looking thing. We got a hooks happening on the RSI. This is a bull pullback. This could go higher. This could rally higher. Let me tell you the problem that we have here. The problem that we have here is on the drop, we had a significant down candlestick on the monthly chart. I want my candlesticks getting smaller, dropping, not getting larger. That's a problem. Here's the other issue. If June turns out to be bearish, and this bullish setup that we see on the spiders, diamonds, Qs, on the Russell's 2000, on the financials, all the major indices, if the very next candlestick ends bearish, expect a serious sell-off in the markets, because this is all set up for bulls to come in. The confidence for bulls, all the technicians, CMTs, everybody is saying they're not saying, most people don't even see this. But if they look at the charts, they analyze it, and they have any tenure at all as a technician in the marketplace, this is set up to continue bullishly. However, if it does not, that means the bulls will be faked out. The bears will have all the confidence in the world. And you will have both bulls and bears selling after this massive 7-week drop we've had in the markets. Last week, 8 weeks, we went higher, okay? If we get that, it's hard telling where the bottom of this drop will be. It just shows how weak the markets truly are. So this is what we're watching for. June could not be more important to us, okay, because of this. So this is something that we have to watch. Now, the other thing I like to do here is I like to go to the weekly charts and say, okay, what's the weekly challenge? This is a lower time frame. Let's see what's going on here. Weekly time frame. Look at this. We're down, 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 and we get a major rally to the upside. All these moving averages had a nice bounce off of them. If you don't know trend lines. If you don't know trend lines, you learn them well. We spend a copious amounts of time on that in our mentorship. So anyway, big bounce, and we broke above a major trend line there. It all looks great. So we have another week or two. It looks like it could be really bullish. Maybe another week bullish. If you go to the diamonds, same thing, broke a trend line. Up, another week bullish is what it looks like. NASDAQ, up, broke a trend line. Maybe 2 weeks bullish there. Russell's 2000 broke a trend line. That's a jab, by the way, guys. I could get really bullish. If it breaks, one more week there. But let's say it breaks through this. If it breaks through these trend lines, guys, it's going to get so bullish out there. June would be a monstrally bullish month if it breaks these trend lines. Russell's 2000 broke a trend line. At least one more up week, okay? Now, I said all that to say this. What if smart money says, you know what, thank you for giving me an up week. I was caught in this in my longs. I'm going to sell into this strength to get some of my money back. If we see that next week is a short week, right? Because Monday, Memorial Day, so you got Tuesday through Friday. If Tuesday through Friday turns out to be a bearish week by week's end, guys, are you kidding me? That will be the start of a bloody June. And if we have a bloody June, as I just shared with you, this market continues to be toast. Toast City. Toast City. I should get that. ToastCity.com. I should get that domain. Someone already has it, I bet. Toast City. Toast City. So, but look at this, guys. This is the financials. Boom! To the upside. Big rally, making up several weeks of losses in 1 week. We said that a few weeks ago, I said, this could be a rip your face off bullish move to the upside. Watch for it. Here it is. The question is, how long will it last? Next week in June is going to be very, very important to us as individuals, traders in the marketplace to know how to trade this. We have to watch this closely. Watch these indicators, oscillators, watch the price action and volume and how they stack up to one another. Quick look at gold. Gold weekly starting to bounce. Let's see what happens there. Silver right in a lot of moving averages there. But something I'd rather do. Let me go over here to the monthlies. I'm sorry, on gold and silver. Here's gold monthly. If you look at the big pin, that's a big bullish pennant at support. The gold monthly looks like it's going to get really bullish to the upside. Okay, silver, same thing. Up, 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 kind of a pinching flag pennant at support. That thing looks really bullish to the upside. So for all you people that trade precious metals, share the video, share this at the monthly charts. Look really, really bullish. If we crash below these trend lines on gold and silver, these lower trend lines there, that's going to be very bearish. You have to watch those numbers. You have to get these right. If we get a close below 170 on GLD, that's bad on gold. Silver, if we get a close below $20 on SLV, that's going to be really, really bad. So that's what we're looking at, guys. That's what we're looking at. I could go into the dailies. I don't know if they matter quite as much with the power of these monthlies and weeklies, but the daily spider broke. I mean, let me show you something on the daily spider. This is trouble, 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 trouble. Boom! Good news happened when we broke that trend line. So we're at 395 break on the spiders. That's buy time. Gets up here when it breaks this trend line. Bam! Boom! Rather, buy time. It broke this one. Buy time. The problem is you got to be careful buying right now because we're pretty extended to the upside. But look at this trajectory run. Very, very powerful. This could continue higher. Diamonds daily. Broke a trend line, broke a trend line, boom, to the upside. NASDAQ, broke a trend line, boom, to the upside. Russell's 2000, broke a trend line, boom, to the upside, closing at the day's high. Russell's 2000, broke a trend line, boom, to the upside. Gold, choppy, choppy. Silver, choppy, choppy. That's just a bear pullback on silver. So on the lower time frame, guys, that looks more bearish than it does bullish to me. On the dailies, VIX is now below 30, guys. We're at 25.7 at the time of this video. This is the daily chart. We're heading down. Major support here, you know, at the 24.5 level. And if I go to, actually, let me do this. I'll show you the this is Bitcoin almost at a major support level, way oversold. This is a buy area, guys. Bitcoin is a buy area around 26,000. Ethereum, a buy point is like right now. If I go to the monthly charts, let me show you this. This is Bitcoin monthly chart. We came down at this area, started to bounce. If you go to Ethereum, down, 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 started to bounce. But I'm telling you guys, this, we could have some buy opportunities on what we're seeing on both Bitcoin and Ethereum at these levels. So I'm really liking what I'm seeing. Let me show you the Ethereum. We have a falling wedge and we're starting to break out right now. Big bullish divergence, guys. This is probably a low that it's putting in at this moment. So there it is. I'm doing my hand so I know when to zoom in on myself. But that's it. For you guys, again, if you're a vet, you're a veteran, you're a soldier, we give you the utmost respect here at Grok Trade. We salute each and every one of you. Thank you for the service and the dedication, and thank you for all that you do for us and willing to do for us. Those others that have taken the oath just like you have and have paid with their lives, the respect to them and their families and friends is immense with us. So for all those that made it this far, say made it in the comments. Love to hear your ideas on what you see in the technicals. We appreciate each and every one of you. And if you're brand new, happy to have you. Feel free to follow. Catch you later. Bye.